I'm going to share my computer with you guys. I don't know if you watched the financial forecast with Carr. Anybody watch it? And you guys can hear me okay?
Yes, we can.
Okay,
yes, loud and clear.
Okay, so we're gonna go over some of the financial forecasts, not everything because there's just a lot of information. And I don't know if you know, but this is Leslie Appleton's last year. So she was kind of sad about that, and she's done such a great job there. I have my screen on, and some of the things they went over were the numbers in California and what they predicted and where we are. Economists predicted that we would have a recession in 2020 due to trade wars. You know, that started off in 2019. And what we didn't expect was a pandemic. In 2019, if you can see from the chart, the sales were slightly off by 4% increase in the state. This is statewide. And then at the end, we'll go over some of the numbers here in Fresno with medium sales prices. Mortgage rates under 4%, 3.9, 31% of the households were able to afford homes in California. The affordability was good. GDP was 2.2%, and this is the amount of things sold and bought in the U.S. in one period of time. You know, usually they can go by a quarter, by yearly, or to bring the numbers in tightly. So fast forward to 2020, we had the pandemic. Economy started off well in March, causing changes in the market. You know, we came to a complete shutdown. I think that was in March here in Fresno, and the economy just stopped. In 2020, there was 8.8 increase in statewide medium sales price still. Rates were under 3.2%. And of households in California could afford a home, and the GDP dropped drastically to -5. So this is probably, if you read the journals or business journals, you've seen that the GDP has been down probably to numbers that we had back in the Great Depression. So they're not good. While the prices went up, more households can afford to buy, and this is due to the lower rates. The feds are keeping them low in order to help the economy. This is interesting because we have record numbers in unemployment right now and the lowest GDP since the Great Depression. What also helped this economy is the government provided economic relief to families. So where we could have had a terrible market, let me see that Vasily's calling now. Okay. Can someone send Vasily the link because he needs it? Ashley, if you would, thank you. Okay, so that's where we are there. Consumer confidence building back in September. I wanted to show this one because the biggest month increase in 17 years, we have optimism about the short-term outlook. This is important because we see consumers starting to spend. And I think in Fresno or in the US, the numbers seem real, is probably back in September after we were reopened. Let's see. Changes in consumer confidence behavior includes shopping online. I don't know why this is not bringing up the pictures, but I don't want to mess with the computer now. But shopping online increased. Many families supported online companies, and that's a problem because this meant that the people were not shopping in shopping centers. Acceleration of long trend transition on online shopping and specialty stores. We hit record numbers online shopping in 2020. Retail spaces has been struggling. The pandemic accelerated and extended the trend. Shutdowns and social distancing requirements put experiences like dining, entertainment, retail in very weak positions. Town centers could benefit post-COVID as they are mostly outdoors and walkable and give flexibility to accommodate social distancing. Faster growth in e-commerce companies could also lead them to opening brick and mortar locations as showrooms allow customers to test new products. So this has been a challenge for our shopping centers. We've seen that there is a lot of closures to many of the stores like Pier 1, JCPenney's is closing, many others, restaurants. I don't know if our friend Kevin is here today, but I saw that Rocket Dog was closing their doors in the Clovis restaurant, and that's very sad to see. Uncertainty has caused businesses to slow capital investment, indicating a softening in demand in the short term. Demand will likely weaken as firms successfully implement remote working policies, and this has to do with commercial. And businesses reevaluate longer term space needs. Working from home has its high risks, though, less conducive to innovation, high cybersecurity risk, higher difficulty for job training for new hires, supply outspacing demand in computers, electronics, which will lead to higher vacancy rates and deceleration and rent growth. New normal where the office should be, we are seeing higher vacancy rates and tenants not paying their rents. So that's going to be a problem, and that affects the economy big time. COVID-19 has disproportionately affected younger low-wage earners who are more likely to rent than own a home. Apartment communities that cater to hospitality workers would appear most at risk. Rate on time rent could deteriorate further as federal unemployment benefits expired, and the outlook for the rental market could worsen in the next couple of months. I think Tom had some of those predictions, but you know, I'm still optimistic about the market here. Eviction moratoriums can create uncertainty for rental property investors and will reduce demand in the short term. Low mortgage rates could also push some renters forward to home ownership, which I think that's a good thing. Renters and landlords have not been treated the same, and we can see that, especially here in the Valley, renters, there's a moratorium on evictions. You know, you can't evict people. I think Bob mentioned that you could in October, so maybe we'll talk a little bit about that. In many property owned by small landlords, you know, units, that kind of thing, that are still on the hook for mortgages, not to mention rent control, makes it difficult for landlords in the Valley and in many places. When the eviction moratorium is lifted, how many tenants will still have their jobs back and be able to pick up and pay their rent? So that we don't know. And this recovery, I don't know if you listen to the news. I don't listen to the news much, but I do read the Wall Street Journal and online. But this has been described as a K-shaped recovery. And the reason for that is that it reflects that the pandemic has not affected everyone the same. We have tech workers and white collar workers that can work from home, with the minimum wage workers that cannot do the same thing, such as like restaurants, accommodations, food, healthcare, arts, entertainment, those doing well, information, real estate, management, education. So if we can see this slide, it kind of shows a little bit of what we're talking about with the job losses concentrated in the wage industries like accommodations, food services, healthcare, retail, other services, admin support, arts and entertainment, We saw Fresno State this week had to cut some of their programs. They cut wrestling, men's tennis, and lacrosse. So this is really tough. And manufacturing, some of the not so affected have been like professors, science, tech, services, information, wholesale, education, real estate, and we're very thankful for that. Management, finance. I don't know if you guys were able to see the chart before here. Let me see. Which one was it? 22. Yeah, it's not showing for some reason on my end. Okay, so let's go on from there. Okay, so some ask if the election will impact housing because it definitely will. The economy, because it will impact the economy, consumer confidence, and it will impact how the financial outlook is that people have out there for the, you know, whether they should spend, whether they should save, whether they should just be cautious. In the last 4 years, and some people didn't like these comments that Leslie made. I mean, I'm not one to judge and we can't make it political here, right? But whichever way you go, an election will impact because people are waiting to see what's going to happen with the stock market, with the jobs, inflation. So we're not hugely, she said we weren't hugely enthusiastic for affordable housing in the last 4 years. We had laws that didn't support landlords. And then we had the cut for the interest rate on mortgages. So that affected a lot of things. And she had mentioned Biden's housing platform committed. And the question is, where's this money going to come from? $640 billion over 10 years to end redlining for low down payment assistance, to approach comprehensively homelessness, to reinstate the affirmative fair housing rule that was suspended. That is, if any municipality takes money from HUD, they also have to guarantee that they are taking direct action to discriminatory housing practices. And I wonder if this is part of the, if we have noticed on our contract, we do have some things related to fair housing lately. So I think we can go over that a little bit later too. And since Bob is here, maybe he'll enlighten us with what he thinks of that. Now in September, let's look at from September 2018 to January 2020. This is the housing market in California monthly survey, and buyers were asked if it was a good time to buy. And we have where 34% said yes, and this is the highest in 2 years. Sellers were asked the same question, if well, the opposite direction, if it's a good time to sell, and they said 58% said yes. So there's a high number of sellers and a high number of buyers, but we see a discrepancy still in the number of homes on the market. Why is real estate leading the way in the economic recovery? And the main reason is what we've been talking about in the past couple of weeks. Rates remain low. The refinance activity is high as well. So all those things, you know, thankfully the Feds helped and, you know, made sure that we were okay and with buying and spending, and that's helped the real estate market stay afloat. Why is the outlook on housing so high? Again, because of the rates, lower rates. This has fueled the housing market and economy. Price growth in all markets and range due to low inventory. A large increase in higher prices of homes also. And statewide, there is 2 months of listing inventory. And we see there 2 months. That's quite a big number. And I think that's because there's been changes in other areas where Fresno, we still have under a month of inventory here locally. So I think that says a lot on how Fresno market is doing compared to other places. let's see. I wanted to touch on annual housing market survey. First time buyers, highest in, she said 100 years. It says 10 years here. This is first time buyer, highest in 10 years. And she had said 100, which I thought was odd unless she went back a lot further than we see on this chart, which, you know, it may be true. That I don't know. Let's see. Investment sales dropped from 11.8% to 8.1%. Vacation sales were up from 4.7 now to 6%. And they asked, did you flip or rent investment property? More people declining to flip compared to 2019. If we see the numbers here, 2019, we had 18%, 27 said they would rather, they were rather keeping properties. So what causes this? Hostile environment for landlords. So nobody wants to be a landlord in California anymore. Rent control and the moratorium on evictions. Let's see here. People moving outside of California and moving to other places for more affordable advantages, whether it's taxes, no sales tax, etc., or as the previous slide mentioned, also having to do with too much control over the market from Sacramento. In other states, let's see, in 2005, 31% were moving. And today, 2020, 30%. So the numbers increased even from 2013. So that's a big jump of people moving out of California. And I think that's something we've been discussing here, but it's interesting to see it, you know, on the charts. So that makes it interesting. Economic forecast for 2021, things look better for 2021 as far as unemployment. In 2019, we were at 3.77, a big jump to 8.8, and predicted to be 7.1. So hopefully this, it seems like a high number still, but hopefully that'll be, that'll help our economy even further. Now, big question on foreclosures, and I touched on it a little bit. We may have foreclosures. This may have an impact in pricing, but not as big as the, 2008, 2007. It might be in single digits. Government is on board helping, and we have less than a third of homeowners with equity now. So people have equity in their homes. There's no reason that someone can't sell their home in a traditional way. Households have savings also. They are doing better than they were in our last economic real estate debacle. And if no vaccine in 2021, we may have even more foreclosures. So it's, it's like you can't really predict what's going to happen because of the fact that we don't know what we will be working with. Let's see. So a lot of these folks in 2019 have equity in their homes, see, compared to in 2006, 2007, 2008. So the numbers are not too bad when it comes to the real estate market. Let's see, 88.98. So the impact would be half as bad if we're still the fifth largest economy in the world, a top destination, although many people can't visit us due to COVID right now, but still a top destination compared to other places. And we have the top universities and a hub for innovation. And I think what COVID did is help us go back to innovating. And, it really propelled us to look at things and not depend on other countries, right? So I think that was a favorable thing that happened out of that situation. Any comments on that? Feel free to unmute yourselves.
Carmen, in regards to all that from the marketplace,
Mm-hmm.
what, in your opinion, are you seeing in the marketplace right now? Are we in the midst of a slowdown? Are we in the midst of a real aggressive market? What do you think?
Let me show you, see if I can bring up the chart. Okay. So we saw the numbers, and those are statewide numbers that we were talking about. Let me share the market here. I hope this is the right one. So when we're looking at Fresno County, this is on units. So it's on the commercial side. We are seeing that we have 1 month of inventory here. And this is in September, 1.2 months. Let me go back. Oh no, that was wrong. That was residential. On the commercial side, and that meaning units, not commercial property out there, we have 3.3 months of inventory, which has risen from the previous months. We had two months in July, June 2.1, and we saw that we had a ton of property here in what is this, February, 6 months of inventory, and this is on units in Fresno County. So still optimistic about the commercial side and units, although it is rising. So we'll have to see what the end of the year gives us. So maybe we'll look at those numbers later. But I think that's positive, don't you, to be here when we were at 6 months of inventory on units. So we're seeing that maybe because of the low interest rates, people are still buying units, and it's favorable in that aspect. So I think until we get past the election and we see what's happening there, we will have a better idea in that respect. Now, let me try and bring up our residential section here. So here we have residential, and I'm just doing Fresno County. So let me go back and share this part. I think it's important to look at the numbers because it really makes a big difference. Let me show chart. Let's see if that changes. Okay, so now we have a residential, and we're looking in September at 1.2 months of inventory. It has gone up a little bit from August. If we see, we had 1 month there and less than 1 month in July. So the numbers are creeping up a little bit, but we're still seeing multiple offers per properties. That hasn't changed. So we still have a healthy pool of buyers out there. And if we look back, March is not here. Where's March? Oh, here's March. I was gonna say this should be higher. Yes, we had 2.3 months of inventory in February and middle of March. And even in April, we had 2.2 months of inventory. So that's less and less as we've moved along in our market here. And the pricing, let's see what the price looks like. So we see that the prices have risen as well, both in sales and for sale properties. Let me stop the share and we can discuss that a little bit with everyone on here. Can you take over for a minute, Tom? I think somebody was trying to get in right now.
You betcha. You know, Doug, in regards to what you're seeing as a lender, is your demand for a request for loans is great now as it was 2 months ago, or what?
Yeah, the demand for loans uh, has increased again. You know, it took off probably in March through June, and then over the summer months it slowed down a little bit, but we've gotten another boost again, basically probably September and going forward. And so we anticipate that continuing until the end of the year. Real easy. Just lenders are backlogged. Things are taking longer. Appraisals are taking longer. The 30-day close times are being a little more extended. I mean, we can still do some of that on purchase transactions, but the refinances they've put on a different time set that any of the refinances that people are doing are anywhere from 45 days to 60 days, or could be just depending on appraisals as well as just going into underwriting. But demand is still there and people are still interested. So
demand, yeah, I've seen that as well. But on appraisals, the last 3 appraisals I've seen or I've had in escrow did not come in. So I think we're starting to see the appraisers put a cap on the demand a little bit.
Yep, I would agree with that, Vasily. That I'm seeing too. The last 2 that came in, there was an adjustment. So, but the last 2 were under, I want to say under the $250,000 purchase prices, and I think probably in the marketplace, because there's so little inventory in that the sellers and agents are pushing that price up. But they've come in, you know, when the sales price was on the last one we did was $15,000 more than what it came in at value. So, which that's a pretty big margin. But I've seen it too, to where people are waiving the appraisal contingency, and they'll pay that difference in cash. A lot of them have wanted to do that, or at least put some limits on it.
Well, I guess I'm not as optimistic about the marketplace with what's going on with this pandemic as a lot of you are. I think there's going to be a further slowdown. I'm not convinced that we've learned how to live in this environment. There's so many things that are going on. As an example, I say, which is on the other side of what I'm talking about. I was talking to, there's a broker here in town that has one of the larger offices, and he had called 1 or 2 of his agents and says, "Hey guys, what's going on in the office?" Says, "We don't want to. We like working at home now. We'd rather stay home." So there's some changes that are underfoot. And God, I really feel sorry for Vasily and Ashley and all these other agents that have property that need to be shown with these PED forms. And my God, there's not an office that don't have a stack of PED forms that are just unbelievable. So we hadn't seen all the changes that we're going to see, and they're not going to have a positive effect on the marketplace, in my opinion. What do you think?
I think when it comes to the commercial side, you're absolutely right. If the demand for office space is no longer there, it'll go down. But a couple of clients, and myself included, there are a lot of people that are like, "Hey, I need a bigger house because I now need an office. Hey, I need a separate structure because I need a place where I can have all my work things." I think on a residential side, people might start going bigger, but commercial, I mean, I can't show you guys right now because it's a freaking disaster, but here, this is my dining room, for God's sake. I can't, you know, this can't work forever, so.
I don't know that zooming with alcohol in the background is my best bet for the long term.
Yeah, the dining room's right next to the bar. That might be a strange coincidence, huh?
And I think that may be a reason why we saw the higher numbers of inventory in other places in California. I think that changes like San Francisco, San Jose, they were really impacted by COVID. In Fresno, we had a lot of influx of people coming here because they can buy larger homes, less expensive, and have, they need bigger homes, Vasily, so they could have a office to work in, right?
Yeah, exactly.
Mm-hmm.
Seeing a lot of influx into the valley from Bay Area and Los Angeles because of telecommuting.
Mm-hmm.
So people can move to lower cost areas and still work in high paid areas like San Francisco and LA. And that's why the prices are going up, because they can pay more as well.
And we don't have a CPA here, do we? But the question I have is, with not W-2 workers now working from home, is there going to be something where if they're buying properties to have an in-home office, where they can write that off somehow? Because that's a big change, right?
Yeah, I'm not a CPA, but I used to write off just the little room that I had. Now I'm going to write off the square footage of that room plus my entire dining room.
Yep. But
I'm using it for work. We don't need her anymore.
That's a good idea, Vasily.
Yeah.
But a W-2 employee is if they can write off anything, it's going to be extremely limited, because unreimbursed employee business expenses are minimal.
This is a hard market to predict. There's too many uncertainties, and I mean unhealthy uncertainties, that the future, I hope, is a lot rosier than I think it is, but maybe it's not as rosy as we think it is.
Yeah, I think here, again, I keep saying this, but I think we're in a little bubble here where the market, I think, will be sustainable for a little while. We'll have to see what end of the year brings. And Mike Bishop asked, what is the difference between forecast and projection? Well, forecast is an overall picture of the conditions and the businesses expect to exist, right? And a projection, when companies are talking about their company, is they're using numbers to predict variables. So one is overall, and one is, pertaining to if it's a certain business.
Well, I know in our office, we've seen a definite slowdown as compared to, let's say, 2 months ago. The demand is not as great now as it was then.
Yes, I think we're going to have a little bit more inventory, which may be a good thing for buyers right now. And with the feds are not going to raise rates for a while. And they've come out and said that, Powell has, because they have to help the economy and keep it consistent for a little bit. Erica, do you want to talk about that, some of the counters you're getting in general? I thought that was interesting, the one you had yesterday, because I know that was in probably the 300 range. I don't know if you can get on, but still seeing multiple offers out there. Like Doug said, buyers are releasing appraisal contingencies or putting a cap on it, where they're saying if the property appraises, there's a cap on the price up to 260, 360. You can pay over 5,000 of the appraisal price, and that's it. So it's getting very interesting right now. And I've noticed a lot of people are selling in a lot of investment property right now. You see, I wish some of the agents that had those were on here, but people are trying to sell bulk packages, and those aren't selling because, of course, they're in the millions, right? So that's becoming a little bit interesting, trying to sell properties with tenants in them, keeping the tenants, and how do we know the tenants are actually up to date and in good standing, is how I call it.
So,
I know that as far as I'm concerned, I've just made it a habit that I don't sell property that has a tenant in it. When I put one of my investments on the market, it's vacant. It's makes it a lot easier.
It does come, but a lot of people, may not be able to afford that, doesn't have that option. They need to sell them with a tenant in them, or at least go into escrow and then give the tenant. I'm selling one now towards the south of the tower. It's a home with an apartment over the garage, and it's actually a nice little property, and we got it for a really good price. I think part of it was that it was listed by a company out of the area, and they actually agreed to pay closing costs and do quite a bit. It needed more repairs than we expected, so we were able to get a reduction on the price there. And it does have a tenant. Tenant was given notice to move, and my buyers were fine with that. So it worked out okay. Can you imagine, Tom, if we had all these homes vacant in Fresno? One of the problems too is when you have a vacant house, you also have the opportunity for break-ins and, just a lot of things that can happen.
So
Yeah.
I want to throw in a little bit. I'm showing houses today, and two of the houses I'm showing are tenant occupied, and and I think we got to be real careful here. Both agents have shared that the tenants have been horrible to work with, and I think we got to be really careful how we project that and how we portray that. To me, it's almost unprofessional to talk bad about the tenants as it is to talk bad about the homeowner or another agent. I think we need to be real careful how we present our properties when there are tenants involved.
I agree with you. The property that I'm selling that has a tenant in it, and the tenant has been really nice, and they were given notice. I think they were only given 30 notice to move, which is very little, right? But everything is going well, and we'll probably get another update the week of closing to make sure that we're on track, and that they will actually be moving out. So. And then Sylvia wanted us to share a couple of names of experienced real estate tax preparers. So yeah, we can, if you want to, I know Tad Scott, I still have to have him come on here, but he's really good. And he used to be an auditor for the and I've recommended a couple of my investors see him. He's a real busy person where he doesn't probably take everyone, but if you call him now, since it's not end of the year, still busy for CPAs, but not as busy as April, March and April. So I would call, I'll share that number with you. Any other comments out there? And let me see, I'll put it in the chat. What did you guys think about the, I'm too bad you couldn't see the slides. I don't think they showed well from my end, but it really showed that, the malls closing down, commercial property in trouble. I think that a lot of people are taking opportunities right now to buy units because of the affordable rates, and maybe commercial as well. I know, is there any commercial people on here now? I don't see anyone. Well, maybe some of us, but I have someone that I know, they have a building that they're gonna probably be selling, but they have a buyer within the building. One of the renters would like to buy it, a doctor. So I think that may work out very easily for them. So one of these days I'm gonna have Thad over to talk to us because he's really good. And I'll put his number in here. And then, I don't know, Tom, I think you have a good CPA as well.
Oh, yeah. Yeah, I've had the same CPA. My God, 30 years. Yeah. Cliff Vanderbeek.
I too have had the same CPA for 30 years. I'm happy to recommend him if you're looking for a CPA for property.
Let me put them in the chat. What is their name?
Bandy and Associates.
I can't hear you.
Bandy, B-A-N-D-Y, and Associates.
And associate. Put it in there in case that's helpful to someone.
You know, you're talking about the market. We just closed on a ranch in Texas, and my kids were moving into the house last night. Someone knocked on the door to ask them if they were interested in selling. And another ranch nearby, my son-in-law said it's a little bit larger piece of land, but the house was pretty much the same. Just went into escrow for literally twice what we paid. The influx from California is just crazy, and mostly the rural properties, not the city properties. What I'm hearing, his mom has a real estate firm out there in Texas.
Hmm.
I was on the call a little earlier with Carmen, and I wasn't on the call last week because I was in Denver, Colorado for the weekend. And so I experienced the same thing that Bob's saying in Colorado. I was shocked at the booming of real estate there and houses. And it isn't in the city, it's in the suburbs. And I was in Fort Collins, Boulder area, and it's all minimum of 1 acre lots to 5 acre lots. They're building, building starting 3,000 square foot to 6,000 square foot houses. Starting prices are anywhere from $650 to $1.5 million, and there's as many houses under construction now as there is out in our subdivisions, but they're spread out. So the trend is, as Vasily was saying, more bigger houses, office as well as the bedrooms, entertainment centers, indoor gyms, those sorts of things where people are getting out of the cities and, out of California, as Bob's saying, and obviously they're moving, because you'll see a lot of California license plates, or I did, that people are just moving out. So, but I was amazed at the sales and the construction on, what I would consider high end, but that was kind of the median type pricing of the houses. So, starting in the, high sixes and to $1 million, people were just scooping them up. So.
Yeah, it's going to be interesting to see at the end of the year, come even next year, where we are with median prices like in San Francisco, San Jose. I mean, in March when we were shut down, construction couldn't even take place in San Jose. It was that bad. And I think it was because their numbers were much higher than we were here. So it was not good. And Bob, let me share, wanted to share the fair housing form that was put into our contract. Let's see. Okay, here we have the Fair Housing and Discrimination Advisory now in our contracts. One interesting thing I see here is, let me see, where did I see? Examples of conduct that may not be motivated by discriminatory intent, but could have a discriminatory effect. Prior acceptance of, okay, no, I wanted to, okay, here we go. Who is required to comply with fair housing laws? Below is non-exclusive list of providers. Sellers, where I was looking for where it had about letters. There was a section here where we should not provide letters anymore, personal letters. It kind of, Tom, talked about that. Let me see.
Well, it says you have your cursor on it, Carmen. It
Oh, I
says
do?
prior to acceptance of an offer.
Oh,
ask
there
if
it is.
they're offering buyer personal information or letters, especially with photos.
Okay, there it is. Yeah. Yeah. You know, I think I need reading glasses. I can't see very well. That's why you see me squinting sometimes. Yes. So what do you think this means to a lot of people? I see a lot of agents that are a little bit upset about the letters, you know, that they can't write letters anymore.
Yes,
I
they
get-
can.
Well, they can, but
I,
but there, it's, you know, having said this, there's a potential, right, for
there's a-
lawsuits.
So anybody can sue anybody else for anything. A seller shouldn't request it. That would be a problem. So if you want to sue somebody for discrimination under the Fair Housing Act, which is the federal act, or the UNRRA Act in California, and most any other act, so it's hard to prove discrimination. So there's a basic all the buyer has to do is show that there's a potential for a discriminatory effect. So a request for information from a seller would be enough to shift the burden over to the seller to show that there was no discriminatory effect, that there was some other reason, the non-discriminatory reason that they were asking for. But the problem is you don't want to end up in court. So, you know, you can wear a belt and suspenders and be afraid of everything and not do anything, or you can, you know, just be careful that you're not being discriminatory. That's really the purpose of the law. But for a buyer to offer something, unless there's clearly a discriminatory intent, wouldn't be a problem, in my opinion. And I teach this stuff at school, so I'm pretty familiar with what the laws are. But you have to be careful from a seller's perspective and from an agent's perspective, because, you know, we've always had the redlining and the block busting laws that have been, you know, in place for the 60s. The Fair Housing Act, which is the 2A, and and FEHA Act, they've been in place for years. So there's nothing new there. They've added what they have done is added some protected classes. But most of the discrimination, except for maybe gender identity and sexual preference, have been on the list since the 60s.
Mm-hmm.
So this is just, hey, there's more people are sue happy out there. And we attorneys need to eat.
Right.
So.
And Ashley, what are you seeing? I think I saw, my sister showed one of your listings, and I know that she had wanted to bring her baby. So, I mean, these days, I don't know that I would take my child anywhere, nevertheless, to show a home. And how do sellers feel about that?
Erica brought her baby, or the client brought their baby?
No, clients.
Client. I mean, I'm not a mother, but personally, you know, everything going on. Thankfully, most of the listings we have had are vacant. So, you know, it's, as long as people are following, you know, the guidelines of the PED and, you know, going in there, we haven't had many instances where we're really concerned. I've had one client who was very picky about who would go in. She would only allow 2 people plus the agent, so only the 3 lines on the PED. That was it. Nobody else. No children under the age of 18. Nobody who didn't need to be there. It was fun. But thankfully, I know the house that Erica showed is vacant, and it has a really difficult alarm that I subjected her to. So I'm sorry, Erica. But that's another thing, is having a vacant home right now. We put temporary alarms through AmeriGuard, and we tried to convince our sellers in all the listings, because especially in Old Fig, for some reason on Ashland, people are finding their way in, and it's scary. But, you know, thankfully we haven't had to deal with a lot of sellers living in their home during this whole process. I don't know if Vasili has or not, but it's Peas are fun. They're great. They're awesome.
Yeah, one thing about that is that we've gotten a lot quicker at writing those, right? Now you can do it in 30 seconds.
And thankfully it hasn't been updated since July. So hey,
Yeah.
Finally.
Right. And we lost Tom. I wonder what happened to Tom. Now,
I just
Dennis.
texted my mom because I got worried. He got tired. He's
Oh.
gonna go take a nap.
Okay. And Dennis, what are we seeing on the reverse side? Is that slowing down or is that increasing because of everything that's going on? Because, you know, a lot of folks have inventory. I have it, not inventory, but what is the word I want to use?
Okay, it's growing because the interest rates, also increased equity in properties. People worried about COVID. People maybe have been laid off now. And so a lot of people are wondering, you know, what's going to happen as far as cash flow, where am I getting money, all of this, or even with the COVID, you know, take out some of that equity, that illiquid product, and some people are taking it out to start a business. So there's a lot of positive growth. We just recently had a change now. We're going from LIBOR over to one other usage as far as how we determine interest rates and so on. So there's still a hiccup in the market regarding that. So it's just a transition period, but I mean, everything is good. Home prices here in California are up. So it's a win-win situation for seniors. And the biggest market too that we're seeing a lot of growth now is the great divorce. So now with that opportunity for you as realtors, if you're dealing with someone going through a divorce, you know, if the one client wants to stay in the home, why not take some of that idle equity, buy out the other partner or sell it, and then they can list or purchase a home. There's enough equity on a property. So we're seeing a lot of good traction, a lot of interest now. You know, and particularly now, you know, working also with financial planners. So we're getting a lot of traction with that arena as well.
Yeah, and one interesting thing about the market is that, you know, the economy may not be doing so well, but the stock market is doing excellent. So, you know, people can't understand that part. And I think when the rates are this low on residential, for some reason, every time they're lower, people tend to go and invest in the stock market for some reason. So it's like a little flip on the real estate side. But I think that that'll change.
Right. Also, a lot of unknown with election coming up. We're not sure. Still COVID. You know, I saw in the morning news that was it Merck or Pfizer? There's a something that can help with it. But you know, that then it's going to have, you know, mass production getting out to the public. So people are spending more, like you said, but more online rather than visiting malls. So I mean, we still have a long way to go, but real estate is hot, like you said. I belong to a leads group. We met yesterday, and a lady that with Lion Realty, she was saying the same thing that Doug or you were saying, multiple offers. She saw a FSBO, and he's going to try to offer at $485. She went at $500,000 and got a call back. Sorry, someone was buying at $511. So just basically aced her out of the market. So you know, it's challenging times for everybody, but great opportunities for everybody though too.
Yeah, and that's the thing too, on the higher end, you mentioned like over 500, 700,000. I know one of my coworkers has been writing 5 offers and they're in the 500 to 600 range and they didn't get any of them because of multiple offers. That's just amazing to me. And they went over, you know, they go 20, 30,000 over the listed prices.
But and same thing like what Vasily was saying too, is that they're taking off, you know, contingencies regarding the appraise. You know, they'll go with anything.
Mm-hmm.
So we had a hiccup for purchase here in Fresno County, and the hiccup was that the seller owed like $26,000 in back taxes. So the person was trying to say, well, we'll sell it at this or go lower, but you pay my property taxes. I said, no, we can't do that. you as a person, you weren't responsible for your real estate taxes. That's shame on you, not shame on me to pick that up. So that was sort of like creative financing by the seller and the realtor. So that was sort of intriguing.
Yeah, I know I had a short sale where, we were given a specific price to sell that the bank needs to net, and we have to stay within that price. And what happened was that, there, like you mentioned, the taxes were due, right? So my seller obviously wasn't going to pay them. In the bank, we had probably about 6 offers on this property, and the bank would not pay them either. So we had to have the buyer pay for them. The bank said, well, the home appraised at,
The stock market
oh,
is
hold on
back
a
up
sec.
after falling off a cliff earlier this year.
And we've had these furious rallies.
Okay, let me stop that. Sorry about that. Where was I? So the lender said, well, if we're not going to pay them, they need to either increase the price by $5,000 and we'll pay them, or they can pay them. And there was only like $600. So the buyer, they were getting a good buy. This home in any good market should be well worth over $650, and they got it for $460. So they knew they had a good buy there, and they just went with it. Since we're sharing, I'm going to share a video. I thought it was really good because we mentioned the stock market, and I was thinking, where did I get that from? But let me share this video with you. I thought it was really good.
Continue to put their
This year.
we've had investors continue to put their money into our stock market.
They're seeing new record highs on the S&P and NASDAQ.
Major indexes haven't just recovered from the coronavirus shock. They're on a historic winning streak. But while stocks climbed, millions lost their jobs and fell out of the labor force. Companies say more layoffs could come this fall. This means that the wealthiest Americans are netting huge returns, while the poorest are losing opportunities to make money.
I think the question on everyone's mind has been, how is the economy so bad while the stock market is soaring higher and higher?
To get a sense for the disconnect, you can look at the labor market.
We still have 11 million people out of the 22 million who were laid off from the payroll numbers in March and April. Still 11 million out there. And that's really good progress. We've put fully half of those back to work, but that's a long way to go.
Our economy had come to a standstill during the pandemic. Americans are getting laid off. They're making less money. They're spending less money, and all of that hurts our economy.
About half of the workers in the leisure and hospitality industry lost their jobs this summer. Casinos, airports, and music venues sat virtually empty. That's weighing on consumer spending. It plummeted in March, but still hasn't reached pre-pandemic levels. Experts say that this is unlikely to change until the virus is contained. That means businesses are making fewer sales and hiring fewer people. There were 10.7 million fewer US jobs in September versus February. That will make it more difficult for the unemployed to find work. Despite a crumbling economy, the stock market has soared, and there are a few forces driving that rally. Most notable were the policies coming out of America's central bank.
We acted forcefully to get our markets working again, and as a result, market conditions have generally improved.
In March, the Fed made emergency loans available to banks, local governments, and other players in the global economy. That kept investors optimistic about the future, and that can drive up the markets.
Investors said the Fed stepped in like they'd never had before. Their response was quicker and more muscular than ever before, and that was a key driver for the stock market this spring.
The bank started by slashing interest rates to near zero, which made it cheaper to borrow money. Then the bank started to buy debt. By September, the Fed controlled $7 trillion worth of assets, up from $4 trillion at the beginning of the pandemic.
Over coming months, we will continue to increase our holdings of Treasury securities and agency mortgage-backed securities, at least at the current pace. These asset purchases are intended to sustain smooth market functioning and help foster accommodative financial conditions.
The bank's purchasing has sent yields on traditionally safe government debt to near all-time lows. That's driving investors towards stocks.
treasuries all of a sudden don't look as attractive because the yield on them is so low. So if you want returns, you might as well go to stocks. And that's kind of the calculus that a lot of investors have been doing. And it's actually, people call it the quote unquote Tina effect. There is no alternative to stocks because yields are just so low. Where else are you going to go for returns?
This and other actions from the Fed propped up the markets, and the money that flowed from these policies went into one section of the market in particular, technology. Tech stocks lifted entire market indexes this year. You can see that by comparing the tech-heavy NASDAQ and S&P indices to the performance of the Dow Jones Industrial Average.
It's easy to think like, wow, stocks are doing so well. But what we've seen this year is that it's really a handful of stocks that are doing really well. And those are mainly technology companies.
Apple, Microsoft, Amazon, Facebook, Alphabet. These big names offered products that were crucial to live life and conduct business in the pandemic. And their leaders took note on earnings calls this summer.
This was a strong quarter for us, especially compared to what we expected at the start.
We began to see a significant increase in customer demand beginning in early March.
In an uncertain environment, Apple saw a quarter of historic results.
Investors expect solid earnings from these companies, which will boost demand for their stock.
You really can't overstate how well these tech companies have done this year and what a big role that plays in driving the S&P 500 up higher. Apple alone recently was worth more than all of the stocks in the FTSE 100 index or all of the companies in the Russell 2000 index of small stocks.
Tech stocks are doing so well that their gains are outweighing losses in financial companies and energy stocks, which haven't been able to rally. Smaller businesses are hurting too. Bill Ackman of Pershing Square Holdings said that if there were a stock market index of private small businesses, it would likely be down 50% or more. While investors lock in expectations for earnings in tech, a flood of action from individual investors is also changing the markets.
You're seeing newbie investors who had never traded before. They were stuck at home during the pandemic and they opened up brokerage accounts because it's never been easier to trade. It's never been easier to open an account.
Digital brokers like Robinhood offer commission-free trading, which has drawn more investors into the market. During the first 6 months of the year, individual investors made up about 20% of market activity. That's about a 5 percentage point jump from last year. Analysts said smaller investors drum up stocks like Nikola and Eastman Kodak, but they don't impact bigger names like Apple and Tesla. Brokers are making markets more accessible, but that's not helping the bottom half of American workers. Workers from lower income households were more likely to lose their jobs in the pandemic, and many in this group have historically been shut out of the stock market. Most stocks are held by the top 10% of Americans by wealth, according to data from the Federal Reserve. Charts like this sum up why a booming stock market seems disconnected from the economic reality for many Americans.
Okay, we're back. I had to share that with you because I pinned it for a while. And then I, because we've been having guests, I had not been able to share it. And I think it's important because sometimes we don't understand what's going on behind the scenes. And I think that explains it really well. I know a lot of young people. I have a brother that worked for Telsa, and they were given stocks from the company, and they're able to keep buying the stocks even when they leave those companies. A lot of young people have another brother that is general manager with Cheesecake here in town, and they're heavy. He was heavy on buying Apple this year, which split a couple of times, and that's, I think, a lot of young millennials have been getting into the stock market lately too. Aside from the millionaires, I think that's where the money is. If you don't have millions, it's hard to make money. Any comments? Did you guys like that video? I thought it was really good.
More, isn't it? Just stocks?
Yeah, Carmen, I liked it a lot. And yeah, I've been, my grandson is 24 and 20, almost 25. And him and all his friends are in the stock market now. It's funny. All these millennials, and they're making money. Ann's nephew just sold some stock to buy his girlfriend a beauty salon station. It's like funny, they're already dealing in
And
it.
he's like 20.
He's 20 years old.
Yeah, you know what's funny? When I was in college, I remember when I was in college, I took a class on the stock market, and I used to buy like Intel, IBM, all those stocks, and I remember my second vehicle I purchased from selling my IBM stock, and it all came from just taking a class, because we used to have to watch this. When you're dealing with stocks, what's important is that you have to follow the companies. You have to know what they're doing, what their projections are, and what they have in the future, because they have a future forecast. And you have to really understand the topics, though. I couldn't possibly get into the tech part because I don't understand technology or software that well. But somebody that does, like my husband, he was into these early companies like Red Hat that was popular in the 1990s. You guys probably never heard of them, but they made a lot of money. And if people understand and know those things, they have good opportunities out there. So it's kind of interesting to hear you say that your young kids, grandkids are doing that, because it's something that sparks the interest, and they read, or they're into what was it, Apple and all these companies, and they see that those are making good things in the future, right? I mean, back in the 90s you had IBM, and today we have Apple. So it's amazing.
And it's also easier for them to get in. They don't need the money you need to get into real estate.
Yes.
Yeah, I have some people into Bitcoin. They were making some money. There was a hiccup, but I mean, they're making like 4, 6, 8, 25% a week. But it was through a broker. It just wasn't just on the market. So that was intriguing. And so who would ever think that Bitcoin's been around for about 10 years?
Mm-hmm. But I will still say that there's no better investment than real estate to me, because you have a tangible asset, you have a monthly return, so you can't beat that, and appreciation. Bob, are you frozen now? Did you like that video?
Yeah, it was interesting.
Yeah, I love those things, and I was bummed that
a little older, but yeah, it's probably pretty true. There's a lot of people that are out of work.
Yeah, and that's what's amazing right now, that our economy hasn't tanked with the unemployment numbers the way they are, and companies closing. Kevin is not here today, owner of Rocket Dog, and like I mentioned earlier, he had to close his store in his restaurant in Clovis yesterday.
Well, yeah, to every action there's an equal reaction. So people are being laid off because companies can't afford the payroll, but people are still buying things. And the discretionary purchases are probably really shrinking, but there's other companies that sell things, well, the electronics, because we have to communicate that way. Food, people still have to dress, so they're, basic clothing thing. There are certain basic industries that are going to continue to employ people and continue to make money while other businesses are closing. And then at some point, it'll turn around and start growing. But I think Tom made a good point. The economy is slowing down. That's for sure. There's no question about that. But there are certain areas that are going to stay stable and maybe even grow. And real estate has always been cyclical. I've been in this market for a long time. I started in lending, and there have been, every 10 years you can almost set your watch by it. There's a recession of some sort in real estate where sales and prices even decline. So we've been in a boom market. We're currently locally in a boom market, and prices are going up, but that at some point there's going to be a slide back, and hopefully it's not a big slide back like the last one, but there's always a slide back by 10 or 15%, and it comes back, and so I think that no matter what causes it, we recover, because we don't, in our economy, people don't give up.
Mhm.
You know, we're fighters. That's been our backbone of our economy. We don't give up. And I think that's true probably worldwide. People aren't going to lay down and die. They're going to, you know, pick back up, and they're going to fight and make a living and try to get ahead in life. And I think that's just normal cycle. So we just have to figure out the best way to get through it.
And something that, you know, Kevin's not here, but something that I like about him is that he doesn't put all his eggs in one basket. You know, we have to diversify, and I think that's key too. Sometimes, in order to make it, is to you know, put our money in different areas. If we're realtors, you know, we don't only do sales; we can invest. Now, Bob, when you were looking in Texas for a couple of months, did you see trends in pricing changes or inventory there?
Oh yeah, inventory levels. It was very similar to our market here. Heavy buying activity, not a lot on the market. We were looking for a ranch, and we had to look and keep looking because, you know, there was a fair amount of garbage on the market and a fair amount of high prices. We got very fortunate, but very, very similar market to here. I don't know if I've shared with this group, but I have an attorney friend who works over on the coast, and the fire captain of one of the cities on the coast is looking to retire and move out of California, and he went to Tennessee. I think it was either Tennessee or Kentucky. He goes into a real estate office, and there's 3 couples in there. You know, when he walks in on a Saturday morning, all 3 from California. So, like, but people are moving, you know, to lower cost areas, other areas, whether it be, you know, business friendly. That the perception is that California, and it may be probably the truth too, that California is not real business friendly. So they're looking to relocate in areas that they perceive anyway are going to be better for them. So, and just to say, I think the same thing as people are moving to Fresno in the Central Valley from the high cost areas, because now companies have said, hey, wait, we can do this telecommute thing. So there's going to be some permanent changes to the way we do business in our economy. And so the comments earlier about the larger homes, the office and home, that's what's driving that. And I think that to some extent is going to continue. I shared with my law class the other night that you know, we have an office open, and I probably wouldn't have employees telecommute, because in my business I don't perceive that's a very good idea. But there are other attorneys. There are a lot of attorneys that are working from home, not their staff. It's pretty tough to meet a client in your home. So.
Yeah, even the courts, you know, are still doing things from Zoom.
Mm-hmm. And that's going to be a long-term thing, I believe, too. At least, you know, they keep moving the deadline, but now I'm hearing probably into the middle of next year, they're encouraging, I just read something recently, they're encouraging attorneys to do everything by Zoom, even contested hearings. But they said, but you can come to the court, the attorney and their client, the parties. But witnesses have to appear by Zoom. So, you know, where are they going to appear from Zoom? Are they going to appear at home? If you're going to have a witness, are you going to want to have them in front of you? You know, so there's every industry that works by Zoom and has meetings by Zooms they're going to have different requirements. But I would hate to be the owner of a shopping center right now.
Yeah, that's going to be rough. But can you imagine if we had invested in Zoom when it started?
Oh,
plexiglass or microphones. I mean, I hear that you can't even find microphones at Best Buy these days.
Well, they all come from China, but Zoom stock, I think, went up, what, 200% or something?
I think 400. It was 400. It was 400 a couple of weeks ago when I checked.
Wow.
Yeah, it's amazing. Let's see.
Oh well. Who would have known?
I know, right? And Allison said to remind you of Don Scordino's Welcome Home radio show this weekend.
Do you know who the guest is going to be, Carmen?
It'll be me.
Oh, okay.
The guest of honor.
Carmen. All right.
And you know how shy I am. It's not my.
You're a wildflower, uh-huh.
What's the
That's
topic?
why I wanted to remind you, Carmen, you're very humble and you probably would have forgotten to say that.
No,
What is the topic?
the topic is going to be the Holmes Words essays that, we had the contest on, and also about the market a little bit, and just, conversational. So he's pretty good at making you at ease. I didn't have any notes or anything. It's just not my comfort zone. But it works. I think sometimes when we can bring valuable information to people, it makes a big difference, and it's kind of easy when it's conversational, like in the group here as well. So that's helpful. Let me see if there's anything else. I have to go. Okay. Appraisal. So we had a couple of CPAs for Sylvia there, and hope everything goes well. She sounds very, very good. Okay, I don't think there's any other questions in here. I think with that, we'll call it a day, and you guys can start your Friday, right? Back to work.
I started a long time ago.
Good for you. Yeah, today early for me was 6, but I think with the gyms open now, I think I can start at 5 a.m. I have to call and see if they have spin. I think Bob, you and I were talking about that. I like spin, but I don't think they would have it indoor right now. So we'll see.
Probably not.
Okay, guys, we'll see you later, and nice seeing everyone. Take care.
Likewise, thank you.
Bye-bye.
Bye. Thank you.
Bye-bye.